Hello, this is Meetum Television exploring American cuisine. This video is being broadcast simultaneously through Mijun Television and Jaehyun. I'm going to talk about the corner that analyzes American stock options and the purpose of this corner. The idea is not to recommend the best stocks that are just good at the moment. To put it simply, I'm running this corner to introduce good companies in detail, regardless of the current timing. So it's not about telling you which stocks to buy right now or anything like that. We mainly focus on introducing companies that are good, even if they are not currently in the spotlight or actively traded. The purpose is to help many people understand how to interpret this stock based on data, to share good ideas and to help people not only in this industry but also in other industries learn how to analyze and interpret companies through the Joyce system. So for industries where the stock price has fallen a lot, usually only the bad companies survive, so all the companies in that industry seem similar, but when the stock price goes up, you can see which companies are really strong. So when only good news is present but the stock price starts to fall, the good news disappears and only the bad news remains. This kind of pattern often happens. So even when there are bad factors, if the stock price has already dropped a lot, it's more important to judge whether those bad factors are already reflected in the price or not. That's why when there are bad factors, the stock price often stays low for a long time. If a new negative factor appears when the stock price hasn't fallen much yet, it could drop even further. But if the negative factor is already well known in the market and the news has already been reflected, then in reality the stock price may react in the opposite way. That's something you should keep in mind. So that's why I keep talking about these sectors in this corner and also about the various economic situations that these sectors are facing. Next, we also look at how the United States and other major global economies affect the sector, or how the relationship between the United States and China, or the relationship between other countries, or even currency fluctuations can impact these things. When these political factors come into play, or when we start to discuss these kinds of issues, these factors actually have a direct impact on the stock price. So when this kind of news comes out, I personally think about how it could affect the stock price. So that's why when we introduce industries whose stock prices have already risen a lot, there are times when that happens. If that's the case, most of the time, the industry has already seen a lot of gains. So people often ask, isn't it too late to get into this industry now? There are a lot of cases where people are concerned about that. When I experienced those bad news myself, I realized that the things I had imagined or worried about were actually happening as I continued to be involved in that industry. Whether those things happened or not, we explain based on the data, and we try to interpret all the news in the market from the perspective of this corner's core beliefs. So we don't analyze or interpret things in any other way. For those parts, if you refer to other YouTubers or these sections that analyze daily news and market conditions and summarize them, it will be helpful to refer to those as your main source. I now mainly focus on data, so I don't give stock recommendations, but I try to let you know about the indicators that many people use for rational and empirical judgment, and I try to introduce those parts to you. Since that's the purpose of this corner, I hope you understand and make good use of it. Today's featured company is ASML Holdings, and the symbol is ASML. Many of you may already know that NVIDIA's earnings announcement is scheduled to be released after the market closes today. So after the earnings announcement, I think the stock prices of related semiconductor companies will be greatly affected. So first of all, there are companies that manufacture semiconductors such as NVIDIA, AMD and Intel, as well as companies that make microtechnology, and Taiwan Semiconductor Manufacturing Company will also be affected. They are all included in the foundry, and next there are important equipment companies that produce semiconductor chips. Usually, when chip companies and chip makers do well, the stock prices of these companies go up, and then if these chip makers are doing especially well, the stock prices of equipment companies that supply them also tend to rise together. So first you look at the chip makers as the primary focus. If the chip makers' stock prices rise a lot and their performance gets much stronger than in the equipment sector, as a second step, it's good to look for portfolio opportunities there as well. In the equipment sector, you can also find the best companies or hidden gems. So introducing those companies would also be a good idea. I picked ASML. Previously, Jahi also mentioned ASML as a top blue chip stock in the semiconductor sector, but there are many other chip makers besides that. We talked about AMD, MBD and Taiwan Semiconductor Manufacturing Company, but those companies are not the focus today because they are not the main topic right now. The reason we introduced those companies in that segment was simply because it was the right time and context to do so, not because they are the only ones worth mentioning. Right now, ASML is lower than Taiwan Semiconductor Manufacturing Company, or NBW, but that doesn't mean it's undervalued. The purpose of this segment is to explain how to interpret the data, so I hope you understand it that way and keep watching. Thank you. If you look at the stock prices of ASML and Lam Research, you'll see that their prices have fluctuated a lot. Compared to before, some have gone up about 20-30%, and even the companies that haven't recovered as much are up around 10%. But equipment companies don't seem to be recovering as quickly. In the case of ASML Holdings, the stock was traded at around $1,100, but then it dropped by about 50% to as low as $500. It dropped to around $580, and recently as the stock price rebounded, it has been recovering and is now on the rise again. So even though the recent rebound is a strong one compared to the previous high of $1,000, there's still a lot of room left to recover. So I gathered comprehensive data on ASM's performance in this market, its major industries, future outlook and current valuation, and I'll explain these things to you. Also, if you search for news or related information from various sources, you'll find a lot of different opinions. So I hope you refer to those news articles and make your final investment decision. I think it would be good if you could do that. Yes, I usually don't explain in detail about general industries or these kinds of things. When I work with data, I try to keep things simple and explain them in an easy to understand way so that you can understand the business. I think that would be more helpful for you. Rather than giving a general overview of the industry, I think it would be better to just briefly explain the essential points on one page so that you can at least understand what this company and other companies in the industry do. This company called ASML is one of several companies that manufacture semiconductor equipment, and among them it is known for its lithography equipment. If you hear the term lithography equipment, you can think of it as the equipment that draws the circuit patterns. So, they create a design for the semiconductor chip, then shine light onto it, and by using that light, they transfer the design onto the chip. This is how the circuit pattern is precisely drawn onto the semiconductor wafer. That's what we call lithography equipment. Especially in companies like this, they use equipment called extreme ultraviolet or extreme ultraviolet lithography. When we say ultraviolet or ultraviolet, if you look at the spectrum, there's ultraviolet behind visible light. Our ultraviolet is at this wavelength, and extreme ultraviolet is an even shorter wavelength of ultraviolet. So by focusing extreme ultraviolet rays onto a very small area, they draw patterns through these rays. This type of equipment is called lithography equipment. In the case of ASML and similar companies, they use extreme ultraviolet rays, and for lithography equipment like this, there are only a few companies in the world that can make them. This company is the only one manufacturing this equipment, so that's why companies like Taiwan Semiconductor Manufacturing Company, Samsung Electronics and Intel have no choice but to purchase this equipment from ASML Holdings. There's no other supplier in the world that can provide this kind of equipment. Especially for equipment like photolithography machines, it's possible to draw extremely fine circuits, and the same goes for semiconductor wafers, where you can draw even finer circuits inside the wafer. A lot of storage devices or data can also have speed issues like this, and there are ways to handle the speed more quickly. If you want to produce high-performance semiconductors or artificial intelligence semiconductors, you need to use photolithography equipment called extreme ultraviolet to draw these patterns. That's why this equipment is becoming increasingly important as it becomes more advanced. So, companies like NVIDIA and memory makers, as well as Taiwan Semiconductor Manufacturing Company and Samsung, as their production volumes increase, the demand for extreme ultraviolet equipment made by ASML also rises. That's why the supply of this equipment is considered a barometer for the demand for artificial intelligence semiconductors. So if chip makers do well and the semiconductor industry does well, the equipment companies behind them also benefit. There are many different equipment companies, and among the equipment supply chain, there are various types of equipment. Among them, ASML is still the company that holds the most advanced technology and is leading the market. So I'll explain while looking at the data together. Among the risks for this company, one is that changes in the performance of major customers in the semiconductor industry can have an impact. So things like inventory adjustments or these kinds of factors can directly affect the company's performance. I think you can look at it that way. In cases like this, you need to be very careful. So if you look at the recent equipment that has been delivered, according to the articles from May, there are machines that cost around 1.5 billion one each. And the equipment delivered in May recently is said to be worth about 3.5 billion won per unit. So even though you can't produce a lot by using this kind of equipment, you can create artificial intelligence semiconductors and high-performance semiconductors. If you use this advanced equipment, you can understand the basic structure of this industry and get a sense of how it works. When I look at the industry through three key questions, the first is the upstream industry, the second is the value chain, and the third is supply and demand dynamics. So, when analyzing this upstream industry and categorizing it, it's not about saying that all three companies meet every condition. Just because we introduce companies that meet all three conditions doesn't necessarily mean they're always good companies, but they are still worth considering even if only one or two conditions are met. So the last factor, supply and demand, is always left out. So it's not about timing the purchase right now, but rather the idea is to wait until this supply and demand situation improves. So don't just think that I recommended this stock because the video is going up. There's no direct connection between the video itself and the stock recommendation, so I hope you all make a comprehensive judgment about those parts. This company's SMART score is a measure that stands out among similar industries with a score of 89. An 89 score puts it at 9th place among all companies listed in the United States. So you can see that it's a top-tier company ranking in the top 0.17%. So even looking at the overall score over the past year, there has been almost no change, staying steady at 89 out of 90. This shows it's a top-tier company. Currently, number 1 is Taiwan Semiconductor Manufacturing Company, and number 2 is NVIDIA. So it's a really good company at the top. So it has a growth score of 75, financial stability score of 90, and profitability score of 100, which means it's a really solid company. Next, it has a cash flow score of 90 and a business independence score of 90, so it's a company with almost no weaknesses. This is how we can make our judgment. This part is just my own simple score, but the detailed analysis of the fundamentals, the financial analysis, the risk analysis, and then the outlook and expected performance will all be covered in the following sections. When artificial intelligence automatically scores things with numbers, many people think it's just looking at financial analysis or future expected numbers and making a judgment, but that's not the case. But for beginner investors, it's often hard to know how to interpret these indicators. So if you make good use of these scores, it can help you analyze whether a company is stable, growing, or facing challenges, making it much easier to make investment decisions. If you look a little deeper into financial analysis and try to draw a 10-year timeline with historical data, you can see that this is how things have changed up to 2024. Looking at it on a quarterly basis, there was strong growth up until 2023, but when we look at 2024, sales and profit margins have both decreased compared to last year. If you look at the stock price, it has also dropped significantly, and the adjustment in the stock price has been quite steep, so there was a bit of a shock. Recently, when you look at it based on annual data, the difference between annual and quarterly data is that, to put it simply, annual data refers to the sum of the last 12 months or the sum of the 4 quarters. That's why we usually refer to it as trailing 12 months, which stands for trailing 12 months. If you look at the data for the most recent 4 quarters, you can see that from the second quarter of 2024, both sales and operating profit are turning upward again. So for 2025 overall, if you compare the annual performance to 2024, you can see that it will grow. And by using consensus data, I tried to make the numbers even clearer for you. If you look at the operating profit margin, it's currently 32%. On an annual basis, it's also 32%. And if you look at the most recent 4 quarters combined, it's 33.7%. So you can see that the operating profit margin itself is steadily improving. So we can see through this data that ASM Holdings' business environment is gradually and steadily improving. The data up to this point is already confirmed data, and the data announced up to the first quarter is what we know for sure. As for the parts about whether things will get better or worse in the future, those are based on expectations and actual market judgments. That's because there's a consensus behind it. Recently, the parts of the market that had been stagnant due to uncertainty are now showing growth in sales and recovering their momentum. We have entered an early phase where this kind of interpretation is possible. Next, in the case of these manufacturing companies, there are many areas that need to be checked. And they often say that their assets are revolving assets. When they say revolving assets, they mean assets that are constantly circulating. So that's why they call them revolving assets. So that's why the term revolving is used. So when we talk about inventory turnover days, it means how many days it takes for the company to purchase raw materials, store them, process them into finished goods, and then sell and deliver the products, including the time it takes for the customer to pay for them. Basically, for this company, since it takes a long time to manufacture their products, the inventory turnover days are naturally high. So when you evaluate inventory turnover days, it's important to look at whether the number of days is increasing or decreasing, since the actual number is already high for this company. But what's even more important is whether the inventory turnover days are getting longer or shorter compared to the past. And sometimes there are bands that are set based on past data, and if the numbers stay within those bands, it means the business is running normally and the numbers are in line with the usual business cycles. But if the numbers fall below or rise above that band, it means something different is happening in the company, and you should pay attention to those changes. So if the inventory turnover ratio drops, it means that products are selling more slowly. On the other hand, if the inventory turnover ratio rises, it means products are selling faster. We can see that these changes are happening in the company. So if the economy is doing well, the inventory turnover days will fall below the average range, which means products are selling faster. But if the economy is not doing well, even companies that used to be in front, that used to lead, or that used to sell well, will start to slow down a bit or even pile up inventory for a month or two. If that happens, the inventory turnover days will increase. So if you look at ASML's chart, you can see that in 2023, for 4 consecutive quarters, this part is going down. And then here is 2023, and here is 2024, and this is the section. If you look at this section, you can see that the inventory turnover days are dropping sharply like this. So at that time, sales weren't happening and there was no movement in the number of units sold either. So when you hear terms like financial statements, assets, financial status statements, or inventory assets, these are all interconnected and related to each other, so you should keep that in mind. So if your inventory turnover rate is low, it means your business situation isn't good, or it could negatively affect your company's profitability or cash flow. That's how you can look at it. Recently, if you look at the inventory turnover rate, you can see that it has started to slow down. If you look at it in reality, until the first half of 2024, there were some positive signs in the market, but now the inventory turnover rate has slowed down. So overall, it seems like the market is currently going through a bit of a slowdown. Up until 2022 and 2023, the actual results were quite good. So for this company right now, the inventory turnover rate has dropped, and the business environment is only gradually improving. These are the signs we can confirm here as well. That's how I would interpret it. So as you can see, business activities and cash flow slow down for a while and then turn upward again like this. So cash flow isn't tied up in inventory, and as inventory turns over quickly, when inventory is sold, we generate sales revenue. And when that sales revenue is collected, it comes in as cash. That's why cash gradually comes in steadily. The funds needed for operation aren't that much either. If the cash flow from business operations improves, then business activities will continue to improve like this, and the turnover of these inventories will become easier, which means the parts that need to be converted will also become easier. So overall, if you look at it, the upper part is the cash inflow based on 0, and the lower part is the minus. So if you look here, the numbers are stacked up like this in the minus below. So the upper part is the cash inflow and the lower part is the cash outflow. So if the cash flow from business activities is positive and the cash flow from investment activities is negative like this, then plus and minus means that the company is actively investing, and you can see that the company has a good cash flow. So you can judge that it is a good company based on its cash flow status. Next, let's actually look at some examples and check them out. If you look at the stock price and earnings per share, you can see that the forecast for 2024 is currently shown in green, which means it's a confirmed value. Originally, if you look at 2023, it was drawn like this and then it was delayed like this. So now the actual performance is showing steady growth. And if you look at the earnings announcements, the stock price has gone up a lot. It's gone up a lot. But in 2024, it's not looking so good. The stock price has already reflected the high valuation, and the dividend has also been adjusted, so this is a situation where the adjustment has already been made. So compared to the previous high, the stock price has dropped by about 50%, and after the adjustment it's currently in a state where it's just rebounding a little. Afterwards, if you look at how it moves, it seems like it's going to move sideways for a while, but eventually it's heading upward in the rankings, and then after that it enters these two phases quickly. So it's about the direction and the speed, whether the speed is gradually increasing or if it's getting faster. For example, let's say it's 10% this year, then 15% next year, and 30% the year after that. If it keeps going up like that, or if it's 30% this year, then 10% next year, and then 5% after that, depending on these changes, the direction of the stock price will be completely different. So you can check the numbers for those parts through consensus data. So if you look here, the expected sales for this year are about 36 trillion won with a growth rate of 22%. Then the next year, and in 2026 it's expected to grow by 9%, and in 2027 by about 13%. In the case of sales, there was also double-digit growth last year in terms of minus. Even for those parts, it seems that sales growth of up to about 20% is coming out due to the base effect. Normally we can interpret it as a rapid growth if it grows by about 10% on average. Earnings per share is calculated at a much faster rate, and although earnings per share grew last year as well, this year it's expected to grow by about 26 to 29%. $30 and $36, so that's a growth rate of about 20% to as much as 30%. Rather than sales growth, profits have increased even more. So although the profit margin has also risen, what's more important is that the direction of improvement is making these kinds of patterns possible. So the business environment is currently improving and it's at the beginning stage. That's how you can interpret it. Let me briefly explain the valuation. This valuation is based on the valuation directly developed by that company, and they are handling the valuation through their own method. If you look here, as of September 2024, you can see that there is a gap shown in pink. Now if you look here, this is the valuation range. Right now, the area where we are is at the very bottom of this range, which means it's very undervalued. And this area up here is the highly valued range. If you go all the way up, it's considered very expensive. So ASM Holdings actually, as of September 2024, or even around September and October, has already reached a pretty expensive price range. Even around July 23rd or 27th, it seems like it will be at a similar level. So at that time, it will already be in a pretty expensive price range. After that, when they started adjusting the stock price, you can see that it reached the undervalued range, and then later there was a period when it stayed in the yellow zone. In reality, during this period, the business didn't slow down that much, but because the stock price stayed in this undervalued range, it was natural for it to rise again from there. In 2014, the semiconductor sector as a whole underwent an adjustment of more than 10%, and then the second downward trend began. Here, the fundamentals got worse, and over here, the market itself was weak, so it was a case where the fundamentals also became weak. If you look at it at this time, the stock price fell deep into the undervalued range. Even now, although it has come up a bit, it is still in the undervalued range. The stock price has risen a bit from its undervalued state, but if you look at it from a valuation perspective, it is still in an undervalued state. The reason it remains undervalued is simple. So first of all, in the market, the overall sentiment towards semiconductors and these kinds of things is not yet completely optimistic. The reason is, in cases like last year, in 2014 as well, sales growth slowed down and there was a stagnation in sales and profits, so there hasn't been a complete explanation for these parts yet, and that's why people are still cautious. But looking at the data, first of all, there are signs of recovery in those areas, and for about 1 or 2 quarters, there has been a clear rebound in those parts. If the stock price goes up again, the stock price goes up, companies will have less trouble raising funds and there will be more active investment. So in that case, first of all, we should check the current situation based on the data and then make our final decision about the situation. If we build a system like this, where we make decisions based on data, I think it will be good. My Choice Award app is now available and you can download it from Google or Apple. Especially now, if you download it from Apple, sometimes the notification doesn't work properly unless you allow notifications. So if you don't allow notifications, the app might not function as expected. That's a bug, and we fixed it this time, so now you can sign in and use the app smoothly from the App Store. So even if you don't receive push notifications, when you install the app on your iPhone, it's an iPhone app. There's no problem with Android, so you don't have to worry about that. If the app doesn't run after installing it on your iPhone, just update the app once, and from now on you should be able to use it without any issues. And when you look at the semiconductor sector, you can see that there have been many ups and downs with boom and bust cycles, and the same has happened with the dynamic random access memory market. But if you look at it in the long term, you can see that the technological analysis and the momentum have both shown signs of improvement at least once. So the recent changes in the stock price within that range are the initial signs of a possible rebound. These are the kinds of factors we're seeing now. So although the actual changes started in the second half of the year, there wasn't much of a shift in performance, but recently the situation has started to improve. Originally, I hoped that things wouldn't have to rebound from here, but now that the market has fallen further, there are more areas that have dropped for a second time, so the rebound is being delayed a bit more in that situation. So rather than large cap stocks, the rebound in the prices of mid and small cap stocks related to semiconductors is happening a bit more gradually. Since the materials sector is going, the downstream industries that use those materials will also follow, so that's how it will be. So let's move on to the next slide and take a look at the current situation of ASML together as the last part. If you look at ASML as stock, it recently went up by 3%, and currently the buying sentiment is strong every day. And ASML was one of the companies where the signal matched well, and up until now there have been 13 buy signals, and the current cumulative return is over 150%. So when the returns are high, if you look at the case here, you can see returns like 93%, 20%, and last time 44%. On May 9th, the signal for $708 came out, and now it's up to $750, so that's about a 6 to 8% increase. If you look at the chart here and look at the overall trend, you can see there are profits in the middle as well. I've recorded everything, but if you look at the most recent trades, there were 4 losses in a row, and then all the rest were profits. So after those losses, the rest were all profitable trades. At that time, when it went from about $600 to $700, and when it was around $20 or $30, it was undervalued, so there were only a few signals. But as soon as the market started to move, more and more signals came out. However, if the market slows down, you never know how long it will stay like that. So in the system, whenever a signal comes out, we immediately make a trade. Then recently on May 9th, when I checked the buy signal again on the system screen, there weren't that many cases like this lately, but here the number of buys and trades increased quite a bit. So this kind of case doesn't happen that often these days. And that's how volatile the market was at the time. At that time, the price seemed to go up, so I bought it, but then it wasn't the case, so I sold it again. It kept repeating like that. Recently I bought it again, and the system gave another buy signal. In this situation, there were more opportunities to buy. However, in the system, buy signals only appear when the conditions are met. So when a buy signal comes up, it means the market is in this kind of active state. So when these signals are updated in real time, many people can see the current situation and make different decisions. Premium members can see all these buy and sell signals, so I think it would be good if you refer to them. Other data can also be viewed by free members. After confirming the trend, Jonsu had a prediction, and then looking at the support and resistance levels, there was also a pattern where the exponential moving average was converted from here to a plus on the exponential moving average chart. When the midterm signal changes, the day the 21-day and 61-day lines cross here is coming up, which was May 13th currently. The 21-day line is above, and it looks like the 61-day line is preparing to cross the 120-day line. So since the current level is around $750, if it doesn't get adjusted here, it seems likely that the 60-day and 120-day lines will cross back again soon. If that's the case, the 20-day, 60-day and 120-day lines are all arranged in the right order, so that's why I think that kind of crossover will happen. At that time, if a reverse arrangement occurs and the price stays below the moving averages for about 10 months and then it crosses back above, if it maintains this upward trend for about 6 months, I think the overall market will enter a proper bullish alignment. If that's the case, it seems likely that the price range with more stability will be possible in the near future. In addition, if you look at the earnings per share chart and the earnings per share related data here, if the growth continues to rise, I think it will be good if you can confirm this and many people can make their final purchases with confidence. Rather than just recommending a list of stocks at the beginning, it's more important to consider which industries are good when the economy recovers, what the valuation is, and what the supply and demand situation is. I think it's better to make a comprehensive judgment based on these factors. If you use this process, I think it will be helpful. If this was helpful, please subscribe, like, and leave a comment. Thank you.